think it's ridiculous to start a third party. We have a tremendous success with the Republican Party. The Democrats have lost their way, but it's always been a two-party system. And I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
I think a bill can be big or it can be beautiful, but I don't know if it can be both. My personal opinion.
Wall Street isn't losing sleep over China anymore. It's Elon Musk they fear now. After launching the surprise America Party, Musk didn't just stir politics, he shook the markets. Tesla's stock plunged, investors panicked, and analysts started sounding alarms. What is it about Musk's bold political move that has financial giants more nervous than global superpowers? Stay with us as we uncover why Musk's new party might be the biggest threat Wall Street didn't see coming. Elon Musk started as a tech visionary building Tesla and SpaceX. In 2024, he gave $277 million to support Trump and Republican candidates via his America PAC. Then he was appointed co-chair of the new Department of Government Efficiency under Trump. Musk personally helped cut billions from the federal budget during his short tenure. This marked a shift in his public role, from engineer to political influencer. Recently, Musk's opinions stirred global controversy. He harshly criticized European leaders on his platform X. Furthermore, he endorsed the German far-right AfD party, angering Germany's political establishment. Also, Musk accused UK leaders of enabling crime and threatened legal action. Consequently, his image has become deeply polarizing. Investors see this politicization as a distraction. However, his bold moves signal that Musk now sees himself as a major political player, both in the US and abroad. On July 5th, Elon Musk officially launched his new political movement called the America Party. He announced it on X, formerly Twitter, after a user poll. That poll asked, "Is it time to create a new political party in America?" Over 80% voted yes out of 5.6 million responses. Shortly after, Musk declared, "Today, the America Party is formed to give you back your freedom." Musk then outlined the party's main ideas. It will push for deficit reduction, aiming to cut national debt. Additionally, it wants to modernize the military with AI. Moreover, the party plans to cut regulations to help businesses grow. Finally, it supports pro-birth policies to encourage more families. Strategically, Musk intends to focus on winning just a few key seats. He stated the party will target 2 to 3 Senate seats and 8 to 10 House districts. He believes a few swing lawmakers could help shift congressional control. This approach echoes past third-party efforts that focused on a small number of districts. Consequently, it could influence close votes on major policy. Musk emphasizes representing the 80% in the middle, who feel ignored by both major parties. While details are still vague, Musk's new party is grounded in his clash with Trump over a large spending bill. He promised to form the America Party if that bill passed. Therefore, this isn't just a meme or social media stunt. Musk is mobilizing polls, proposing policy, and aiming for real seats. So far, it has sparked heated reactions and widespread debate. In the next section, we'll explore how Wall Street responded and why it dropped billions in value. Musk's announcement triggered an immediate drop in Tesla's stock. Shares fell about 7% in pre-market trading. This erased over $68 billion from Tesla's market value. That fall marked one of the steepest single-day losses in the company's history. The plunge followed news that the new Big Beautiful Bill removes key EV tax credits. Beyond Tesla, the broader market also took a hit. The S&P 500, Nasdaq, and Dow fell around 1%. This was fueled by both tariff concerns and Tesla's collapse. Wall Street analysts immediately spoke out. Dan Ives from Wedbush warned of a code red. He said Musk might be distracted from Tesla's autonomous driving and robotics goals. Meanwhile, William Blair downgraded Tesla's stock. They cited loss of tax incentives and increasing political risk. Analysts voiced other concerns, too. They warned Musk's political distractions could hurt deliveries and growth. Some urged Tesla's board to set firm limits on his political involvement. Investors lost faith. Musk's net worth dropped by $15 billion as Tesla slid further. However, a few still forecast hope. Wedbush maintained a buy rating and a $500 price target, but they stressed that political noise must subside. Nevertheless, the immediate reaction showed deep fear. Wall Street feared political disruption more than China. The next section will explain why Musk's distraction concerns run deeper than traditional global threats. Wall Street has watched Elon Musk closely for years, but now his political move is different. Investors once focused on Tesla's production goals and new technology. Today, they worry Musk's attention is split. Musk is leading Tesla, X, Neuralink, and SpaceX, but now also a political party. This dual focus raises concerns about delays in Tesla's EV production and delivery recovery. His ambitious robo-taxi and full self-driving FSD goals require full-time commitment. Instead, time spent in politics may slow down innovation. Worse, Musk's feud with Trump could backfire politically. His past donation to Trump is now replaced by opposition. As a result, some fear Trump may cut EV tax credits. These credits are vital for Tesla's market growth. In the US, if gone, buyers may switch to cheaper alternatives. Moreover, this tension adds regulatory risk. A hostile administration could bring tighter rules or block government contracts. That would damage Tesla's profits and Musk's broader empire. Let's not forget the brand damage. Tesla is loved by many moderates, liberals, and tech-forward centrists. But by leaning into hard politics, Musk might alienate a big part of this customer base. In fact, car buyers may now link Tesla with political drama. This could hurt sales, even if the cars remain top-notch. Some already say Musk's image is bigger than his company's. That could make Tesla's reputation even harder to manage. So far, investors are watching with concern. Stocks go up and down, but trust is hard to rebuild. Tesla's connection to China has always made Wall Street nervous. The Shanghai Gigafactory builds half of Tesla's global supply. It also drives strong profit margins, thanks to low-cost labor and production efficiency. The company relies on Chinese battery suppliers and exports many cars from China to Europe. Any geopolitical tension, like tariffs or tech bans, has always been seen as a key business risk. However, Wall Street has learned to live with these concerns. Foreign market risks are visible and somewhat predictable. Companies prepare with backup plans, risk hedging, or shifting parts of the supply chain. But Musk's political adventure feels different. The America Party adds a layer of unpredictability not seen before. Unlike China risks, political disruption can directly affect U.S. operations, regulation, and federal funding. If Musk triggers policy backlash, it could weaken Tesla's U.S. position overnight. Political chaos could bring trade instability, harsh tariffs, or blocked subsidies. These don't just affect sales, they hit supply chains, hiring, and long-term planning. Investors fear that political drama could last for years. Musk may become a figure of national debate, not just a CEO. Unlike factory shutdowns or supply issues, politics isn't easily fixed. Furthermore, rising polarization could pull Tesla into every culture war. That puts the brand at risk with multiple buyer groups. China may pose economic danger, but Musk's party poses reputational, political, and operational risks all at once. Wall Street always prefers numbers to noise. Right now, Musk's politics look like noise, and it's getting louder. Elon Musk has long been Wall Street's wild card. Now, his leap into politics has shocked analysts. Some see it as bold, while others call it risky and distracting. Wedbush analyst Dan Ives voiced concern in a recent investor note. He said Musk's political focus could slow Tesla's innovation and long-term planning. Ives added that investors want a laser-focused CEO, not one balancing politics and multiple companies. As a result, William Blair downgraded Tesla's stock. They cited uncertainty around Musk's time commitment and possible government backlash. Many believe policy retaliation or loss of EV tax credits is very possible. However, not everyone is sounding the alarm. Some analysts remain optimistic, even bullish. MarketWatch noted that Musk's new party may attract independent voters and centrists. If successful, it could grow Tesla's base and create goodwill among moderate Americans. Some even argue the party could protect Tesla in the long term. If Musk builds political influence, he might shape business regulations to favor innovation. Others think the move signals strength, not instability. Still, the analyst world is divided. One side believes Musk's focus has shifted too far. The other side sees strategy and long-term influence in his actions. Importantly, everyone agrees the market hates uncertainty. Stocks respond to leadership clarity, not chaos. Tesla's recent 7% drop reflects that fear. On the surface, it's a debate about politics, but underneath, it's about leadership stability, brand identity, and investor trust. In the end, analysts are split, but Tesla's future now feels more unpredictable than ever. Musk's move into politics doesn't just affect Tesla. It signals a possible shift in business leadership overall. For decades, CEOs stayed away from politics. Now, that line is starting to blur. Musk isn't the first business leader to show political ambition, but his influence, wealth, and global platform make him different. His America Party shows that tech founders can now shape national debates directly. This raises an important question. Will other CEOs follow Musk's path? Could Jeff Bezos or Mark Zuckerberg consider political roles next? If so, what happens to the companies they run? For investors, this new trend brings serious risks. Tech companies already face regulation and public scrutiny. If their CEOs enter politics, the stakes rise even more. Markets dislike instability, and political drama brings exactly that. Moreover, the rise of CEO candidates blurs roles. A business leader must make profits. A political figure must serve public interest. Mixing the two can lead to conflict, distraction, or regulatory backlash. Musk's shift also tests how far personal brands can stretch. He's built companies, led innovation, and influenced markets. But can he govern, or at least shape policy, without damaging his businesses? Some say this is the start of a new era. Others worry it's a distraction that will hurt shareholders, customers, and employees. Either way, business leaders are now watching closely. The message is clear. Musk may be the first of many. But with power comes responsibility and risk. Investors, boards, and voters must now decide how far is too far. The next few months will be critical for Tesla and for Musk's political future. Tesla's Q2 earnings report, due on July 23rd, is the first major test. Investors will be watching closely for updates on profit margins, delivery numbers, and robotaxi progress. If Tesla shows strength, Some fear around Musk's distractions may ease. If it underperforms, criticism will grow louder. Also, delivery numbers in key global markets will offer clues. Will Tesla rebound from recent drops? Or will political noise overshadow performance? Then comes the policy angle. Watch how the Biden administration and Republicans respond to Musk's political push. If the feud with Trump continues, EV tax credits could be at risk. These incentives are key to Tesla's affordability and U.S. sales strategy. Meanwhile, the early moves for the 2026 midterm races are quietly beginning. Musk's team has hinted at targeting 2 to 3 Senate seats and 8 to 10 House races. If the America Party backs strong candidates, it could become a real player by then. Wall Street will also monitor how other tech leaders react. If Musk gains ground, more CEOs might dip their toes into politics. That could shift the balance of power, not just in boardrooms, but in Washington too. For now, Tesla's fate is tied to more than cars and code. It's now entangled with political strategy, public opinion, and regulatory pressure. Wall Street has always feared risk, but what spooks them more than China, inflation, or interest hikes is uncertainty. And Elon Musk's new political adventure brings exactly that.